We have a bad Fed chairman, really bad. If he would lower the rates, and I tried being nice to the guy, it doesn't help. He's like a knucklehead. A stupid guy. He really is. You know, each point, think of this, each point costs us $360 billion. We have a man that just refuses to lower the Fed rate, just refuses to do it. And he's not a smart person. I've been nice to him. I do it always. I don't know how to sell. I've been so nice to him, fellas, you wouldn't believe. Let's have dinner. Too late? I'd call him too late. Come on, too late. Let's have dinner. And we should be at 1%.
Today is the day to talk about the central bank's independence. My name is Mubarak Ali, postgraduate student in banking and finance in England. I have been trading the Egyptian stock market for about almost 6 years now, and the US stock market for about 6 months. Without further introductions, let's start. Goal for central bank's independence from the government is basically, in simple terms, to isolate the monetary policy goals from the political incentives. Okay, so and now the question is, what are the monetary policy goals, right? The monetary policy goals: stable inflation, promote financial stability, and support sustainable economic growth. That's like in simple terms, okay? And the political misuse or like political motives, we all know that, right? So basically, this is the whole of the video. Actually, you can just leave now, because like this is the whole message of the video. If you want to know the dynamics behind it, I will be giving them into details. So let's go into the reasons now. The first reason: preventing the political misuse and abuse. Basically, let's have an example, okay? Suppose like someone is running for presidency, okay? And that person has both powers of the monetary policy tools and the government tools as well, okay? That person would opt for huge government spendings for basically increasing employment levels in that country, and lowering the interest rate to a big extent increases the spending in that country. And basically that's what we all need, right? We need lower interest rate for more spending and higher jobs. The point here is that with such actions, that person is neglecting the detrimental long-term effects of those tools, which is basically increasing or spurring the inflation, right? Or spurring the price levels, because these kind of tools are going to increase the demand on the goods and services in that country, which in turn increases the prices, which basically, i.e. inflation. That's why it's so crucial to have independence, so that central bank has that goal of maintaining the inflation or the price levels and low levels, and that shouldn't be in the government's hand. The second reason is that inflation helps governments finances. Let's take an example, okay? Supposedly the US has like $1 trillion in debt, right? And the inflation rate now is actually like, let's take like a amount of 15%, okay? What does that actually means? It means that those 1 trillion in real terms are actually $850 million in the next year's purchasing power, right? Since basically the inflation is 15%, right? And basically, let's think about it. Which entity in a country has the most debt, right? It's the government, right? We all know that. The government has almost the highest debt as an entity in a country. So basically, in simple terms, when you are in debt, you want to have much more inflation, right? But a question here, which is, can the government like finance its debt forever with this trick? They can't, because they are going to like issue bonds with like new bonds or new debt with higher and higher interest. Interest here is basically the price of the debt, right? Because like, let's think about it. That 1 trillion before, like those bonds or those debt was issued with like 10%, 11%, 9%, right? Basically, when the government wants to issue a new bond to keep financing its operations, right? It will actually issue those bonds with a higher and higher rate, maybe 17, maybe 18%. And the key word here is expectations. The expectations of inflation actually feeds inflation now. So it's like a very vicious cycle here when it comes to inflation, and I'm going to talk about that inflation expectation in the third part. But let's just keep in mind that inflation helps government, and basically you can't give that option to the government to basically have the monetary goal and monetary policy tools, because basically the government now has a conflict of interest. The reason is that independence creates credibility. Okay, what do I mean by that? As I have mentioned before, there's a huge relationship between inflation and expected inflation. So basically when inflation gets higher, right, people think that this inflation is going to stay forever. So that feeds into expected inflation, right? And now you think that there will be like an increased price levels, right, in the next year, for example. So now you are going to demand higher wages. You are going to increase your spending more and more, because basically you want your money now, or your paper money now is losing value. So basically you want to dump those paper monies as fast as you want, in terms of spending. So basically you are spurring your spending, right? And that actually increases the inflation even more, and that actually increases the expectation of the inflation even more, which leads us to a concept here, which is persistence of inflation. In the industry, they say inflation, or the expectations of inflations, and the expectations of the inflation is not anchored. The whole issue can be solved when you have independence, right? Because now you know that the central bank has his main objective to decrease the inflation, to decrease the prices. You wouldn't believe that this goal would be achieved with the government, right? You only believe that when there is another entity, which is not the government, has the whole mission or of such thing. Now, after knowing those three reasons, and after watching that video, we could have some understanding of why Trump is shouting towards Jerome Powell, or why Trump actually really hates Jerome Powell, and how Jerome Powell maneuver that thing and just wants to do his job, which is basically controlling the inflation and promoting a sustainable economic growth. So yeah, that's it. Just want to say that whether you're professional, whether you're a professional investor, institutional investor, or retail investor who just wants to navigate the world of investments, my suggestion is that please follow the updates on my channel, because I believe there is a value proposition here, and you can actually check my last videos of the news. I'm talking about Bitcoin and how Jimmy Dimon actually flips his views on Bitcoin. I'm talking about the most crowded trade on Wall Street. So you can definitely check that. Thank you for your time, and follow for more. See ya.